right. Hello, everybody, and welcome to the stream. I hope everyone in America had a good long weekend. Obviously enjoyed your time with the family. Thanksgiving was last week, and now we enter a new week filled with news, filled with Jerome Powell, filled with jobs numbers from the US. It's all happening this week, so definitely stick around for the next hour as we take you into the open. How's everyone feeling today? Feeling good? I hope so. Hopefully, it might be time to hit the gym, though, yeah? That's what always happens after Thanksgiving. So we've got the poll coming in here today. Remember to follow at FX Evolution on the Twitters nowadays. We're posting there quite a lot more. And you can see that quite a lot of you voted. So thank you very much. Almost 1,000 people voting here. Bear took it out with 50.9%, but then I put bull and neutral, which took the other end. So I'm going to call neutral people bullish, or at least neutral, so therefore they can go in the bull side. So it's interesting here to see that the opinions were very bearish overall, with the bull neutral kind of making up literally almost 50% of the other side. So there we go, guys. The poll's in. What do you guys take of that? What do you think in the room right now is going to happen this week? So I think it's going to be quite interesting. Let's move around to what we're seeing, which is, of course, a sea of red. Now, there are some interesting levels that have happened, and I think it's most notably what's happened here in the futures market. And today we'll be going through, of course, the stock market. We'll be going through the lead indicators, having discussed about commodities, which are just absolutely getting destroyed right now. I want to talk about yield inversion, how deep that yield inversion is right now. Again, just really pointing towards some serious, significant valuation problems potentially for stocks next year. And yeah, really everything else that we want to be going through, of course, currencies, commodities, and cryptos. So good morning, everyone. A few people are bullish. A few people are definitely on the bearish side as well. And he says, I'm buying Shopify and PayPal. There you go. Liking those stocks right now. We might take a look at those a little bit while away. We certainly will. Make sure as well, if you're just joining in, make sure to smash that like button. It does help out the stream. So first up, let's begin here with US 500. We'll return back to this chart later. We've got some pretty key demand zones throughout the rest of the sessions. Of course, you have those kind of resistances here. You have that key 4,000 level that was taken during the futures market action. And what I'm thinking today is I'm actually thinking it's going to be a drive in the morning to the upside, possibly fill the gap that's going to be left here, and then potentially find some struggle town there. So I think 4,025, 4,030 will be a watch area for today's session. I think pretty key zone. We'll change this to the color that I like to do, which is always red. So we'll make that a nice red one for the supply side. And I think somewhere in this gap fill could be key. Now, for anyone that doesn't already do it, it's always good to have your previous closes marked. So here's previous close 40.26.11. So you'll want to have 40.26.11 effectively on your chart. And what that will do is it'll just give you your gap, and you can always label these by just going right click settings, put in the text, putting gap, and yeah, then you've got it on your chart so you know where they are. I like to use the Alt J one or Command J if you're on a Mac, and that just gives you that well, what they call the I think it's the horizontal ray. So that's always a good one to have this in the TradingView platform. So I think that this was a significant enough pullback that went through here to maybe incite some weakness throughout the rest of the session. And of course, this will play into the idea that some people have, which is a double top. Now, could it go higher? Of course it could. You're just playing with the probabilities at this stage. Excuse me there. And yeah, where's the next target if it does happen? Well, you know there's a lot of buying previously around 39.50, 39.40. So there's obviously some demand there. I think shorters will have problems getting through this area. For big shorters to come in, naturally say, okay, yes, we've really turned the trends. And I don't mean just like this, because of course this is a very real possibility right now. For big shorters to come in, you're going to need to take out this level down here. So I think this is worthy of an alert, 3,900 basically. If that gets taken in the next week, 2 weeks, non-farm payrolls, who knows? It's going to be quite significant. Coin Monster trading at $2. Good day. Could you have a look at the DAX? And thank you. Yeah, we'll check out the DAX relatively soon, Coin Monster. No worries. Very good. Boris says stocks are so confusing. Crypto is so much easier, but I still love these videos and keep an eye on the markets. Just finding it hard to get into stocks. You find crypto easier? I guess it can be if you're thinking about more the fundamental side, or you just think about following trends that are pumps and dumps. Because there's very defined trends at the moment, which is mostly just selling tons or at the moment in crypto and not that much buying. It can be easier. But yeah, stocks definitely are the play long term, Boris, in terms of the way that you think about it. Technically, they just hold up a lot better. And usually with cryptos, you go on epic runs. So you have epic downs and epic ups, but the actual technical side in between is quite difficult in comparison, I think. Bitcoin's been pretty good recently, though. It's a bot? Oh. Well, that's what I say to the bot. I still find yeah, I don't agree with the bot. There you go. that's how I think about it here, guys. So let's think about down the bottom here. Again, key level, set alerts for these ones this week. These are all going to be your key levels. I'm going to do it all now just so we have them ready. And I like to know when these types of zones hit, because this is how you realistically save your own time. Like if you're in the US, if you're in Europe, if you're in even Australia or Asia, when you're setting alerts, what happens is sometimes you'll get it. And then you go, oh, yeah, I remember that one. It's particularly good when you're looking at individual stocks. So I think that's the draw or the lie of the land so far for the US 500. Let's have a look at the Nasdaq, though, before we go into some of the other pairs. So we saw the Nasdaq again come back up close to that 12,000 and reject it through the last session. And you can see here it's fallen off relatively significantly. Now, if we take a look at this, it pretty much came off that previous daily close level. So again, it could be signaling that maybe there's some little bit of weakness there. We've got strong demand zones around 11.5. They should correlate fairly well to that 39.40, 39.50 area. So I think again, we've got some strong bullish areas. We've got some bearish areas as well, all setting up for the next couple of sessions. Let's move through to the DAX just because we've got a request for it. Nothing much has changed on the DAX. We'll look at the smaller timeframes, but basically we're in a key level of resistance. So here we've got this. Now, if you zoom out a little bit on the DAX, you go to a weekly, you can see the significance of that closure. It was actually slightly higher than any of the previous closures. Again, it's an interesting observation. Does it help us that much? Probably not. Here's the daily. Here's the 2 hour. 2 hour is just grinding higher. It's a dulling market. You don't usually want to short dulling markets, but what you do is you look for switch trends. So where does the DAX start to weaken? Well, you can see it's basically made a series of higher lows. So here's a low, or basically we'll go with this is the low. Here's a higher low. Here's a higher low. Here's a higher low. There, and still. So if that does get taken out, that higher low gets taken out around this area here, which will be the price of around, say, 14,350, then this area could be very significant turnaround. And I do think that at this point, you're starting to see that weakness coming through for the rest of the market as well. Again, probably something like a 14.2 would correlate well with a 39.40. So I don't think that there's any non-synergy here on the DAX. If you start to weaken in here, there'll be buyers, no doubt, at this stage. That's how it looks. If you take that low, you get underneath this alert here, that's when you're starting to talk about serious weakness, real turnaround potential, and the bears back in control of markets. At this stage, it's bull, 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 really. I mean, you can't say the bears are here because we haven't seen them really take control of some of the key levels yet. These are zones where many entries have been ordered in. It just hasn't taken away. Now, what's the case to be said for sick economy? And I want to say this straight away here. And I think it's all about the US 10-year. Now, Warren Buffett, one of his favorite indicators is the US 10-year. He doesn't talk about too many things. A lot of people say, oh, the Warren Buffett indicator, yeah, it was great a long time ago. It was a genius idea. But the US 10-year is highly regarded within bonds traders, within stock traders, within great fund managers as being the lifeblood of really the market and the health of the US economy. So this is super significant. Super significant. And what it's starting to show us is that it's at 3.672. And of course, our 2-year rate is looking at 4 point whatever it is right now, 4.46. Our terminal rate is looking at 5%. So when you take 5% and you get 3.672 or 4.46 and get 3.672, what that's doing is it means our yield inversion is getting bigger and bigger and bigger. So if we type in US02Y / US10Y, we check that on a chart, you can see the inversion continues to get worse and worse and worse. And this is surprising because look at this inversion just for the data we have here going back to the 80s. It's one of the worst inversions. And when we tend to get these inversions, we also see pretty significant, terrifying zones for valuations on stocks. And I think that's going to be the biggest concern moving forward. I'm still positive we can get out of this, but the market doesn't seem to have too much risk in it right now. 4,100 is not too bad. Boris is not a bot. I think someone said that the way you said it, Boris, I think it sounds like those automated comments in the comment section, man. Anyway, we appreciate your comment. Thank you very much. Jez says crypto is easy. Just wait for the next Elon tweet. Yeah, except for if you have to be so quick. What's your take on China COVID riots? While we ignore some news, but this is big. Yeah, well, I think if they continue to do it, of course, I've always said that's a negative factor. I just want to talk about yield inversion, but don't worry, we're getting onto that topic soon because we do need to discuss it. So this is significant. And I think the bond market here, or at least the market's telling us that we need lots of cuts in the future to get the economy back on track. We still don't know how long this terminal rate's really going to be there. At the moment, we don't get a cut till December of 23. And there's a decent amount of potential damage to be done. We're really pricing in the soft, perfect landing. I kind of hope that happens. I really do. I always like to go with optimistic. I just don't know about it because our inversions are going to get worse and worse and worse. And the 10-year in particular is starting to struggle. And that's showing us that the market's saying there's a sickness here. By the Dipper says, Tom, do you have positions that you hold for dividends or trading only? Yeah, I mean, of course, dividends positions are a huge part of the Australian economy. We have obviously just a few pairs and a few stocks that are really good, and they tend to be really big dividend players. Yeah, you'll hold some. I mean, I like to hold ideas by the Dipper as more than if you're talking about investing, hold ideas. So that idea might be, I don't know, I think semiconductors are great. Now, a lot of you are going to go, okay, I'm going to buy NVIDIA. I would say instead of buying just NVIDIA, I would say, okay, what are the best 4 to 5 semiconductor stocks over the last 5 years, 10 years, 3 years? What's been performing well? These types of things are what I think about. And then I would basically buy a basket. That's a much better way of protecting yourself. Now, you may feel that NVIDIA is the best company. I just don't know that. So I like to protect myself amongst a few of them. And I do it using usually what the market's actually telling me and a few other things. So, yeah, it's an interesting one. So the US 10-year sick, copper's starting to come down pretty heavily as well. A little bit of a bounce here in recent action. So again, copper is going to be something that we need to look at. I'll talk about an indicator in the upcoming videos that we're doing. And we'll go through copper. We see demand destruction in oil pretty heavily. It won't be long till this thing actually gets down to potentially the level that we've spoken about for ages. I did think there'd be a little bit more buying here, but clearly this double top is too much in the direction of trend and just keeps diving and diving and diving. But yeah, down here, somewhere around this 60, basically 64 level is where I expect oil to eventually get to. I have said that for a very long time. And what that brings me to is something I just want to discuss, which is Exxon and ZOM and all of these, XLE, etc. If you have a look at these stocks, well, I know they're making good money. Again, these could be distributions. So I'm looking for like breakout downs. So what I would like to see is a breakout on something like ZOM, then a drop, then a lower high, then a drop again. And that will kind of solidify to me that we're probably in a distribution and that weakness will be coming back into this sector, regardless of what's happening with the market. Remember, there's always opportunities each way. So here we get a break to the downside and there's swung high. Here you can see that XLA has made a new high over here as well. This starts to look like Wyckoff style distribution. So we've got to be wary of this. And you can see the pre-market's down 2.11%. Eventually, a falling oil will hit these profits, and they're not exactly cheap anymore. They're more fair to partially overvalued. Gabriel Hull says, I went on cash on Friday, not sure where we're going. Yeah, it's difficult. I mean, 4,100, 4,120 is going to be a very tough point for sure. Takula Kevin says, assuming inversion indicator is correct for prediction, market is already 20% down. So how much more do we go and when? The average is around 33 to 35%, somewhere around there. Takula Kevin, generally down percentage-wise for the SPY when those things have occurred. So that's the average. I mean, again, that's a very cool average when you think about it, because if, again, you go over to the computer and you put it in, where does 33% take us? Let's go top. Let's go bottom. Notice where it takes us. That's why so many, I mean, a lot of people I've been talking to, again, bond managers and stuff, they're still fairly convinced we end up getting down to these levels. I mean, this was their base case, over here, and they're still feeling it. So they're thinking like this type of thing. Trey says, Tom, we've seen US oil sinking for a while. Companies like Zom been growing big time. Yeah, that's correct. So look, again, Trey, you should know well on oil why it's been going up. There's a certain period of time that it does all right, yeah? And he said here, going up big time, should we expect them both to keep dropping, or, well, US oil to go down? So the thing is that, yes, they're disconnected, but when you've got oil at 70 or even $75 a barrel, a lot of those companies have cut the fat. So they actually make good money. And of course, the market's working on demand in the future. It's when they take a bad earnings that the stock will actually dive. It's the bad earnings that begins the cascade effect of concerns as well. It's just different ways to trap people in different positions. I'm just saying that I'm seeing the distribution. I'm patient on this, very patient. Can Credit Suisse find a bottom? Majority in the sector have been rallying and they are getting smoked. Yeah, so Credit Suisse is not healthy. And everyone stopped talking about it again, but it's a great point to bring up. This is a problem, no doubt. Let me look at this. Look at this. This is Credit Suisse. I mean, we all know it's a big bank, yeah? Its market capitalization is now only 10.626 billion. 10.626 billion. It's trading at an incredibly low price to everything, really. I mean, the 10.6 billion, that was like the price of, I think Peloton was probably worth that much at one point. So it's not worth, we all know what this brand is, yet it's worth nothing. And that's because it's sick. It's very sick. And the other one was, if you have a look at this bank here as well, this has been rallying. So something's wrong with Credit Suisse for sure. Do I know? No. But do I think that's sickness? Yes. And I think it's a great point to read out to people here. There's something fishy, yeah? XLY is not recovering. XLK is not recovering. This rally's mostly defensive. The old economy, it just doesn't smell like a proper recovery. Could be wrong, but hey, that's the way you've got to look at it. You got to bring things together. Oz says, Tom, in the last 4 years, so many retailers started trading. Do you think there is a possibility we have seen an overall peak in the markets for a few decades to come with low volatility? Yeah. So what you're saying is what we call a lost decade. And I can show you that actually on a chart by using an index such as the Euro stocks or something like that. Yeah, we'll just use we'll just use this one, whatever. Can we get the history of it here? No. Jesus. So if you have a look at IEU, which is effectively just European companies, what you'll notice is that this particular exchange traded fund, which I think is 350 companies or something like that throughout Europe, only just recovered back to its GFC amount. So the question Oz is asking is, are we entering this kind of period of time with lackluster returns? Remember, the US economy has been always on the improve, and there are many other sectors or indices, and anyone here from overseas outside of America would probably know this. Many countries in Europe or Australia or anything didn't actually recover properly. And the key word is innovation. The reason you have to always think that America is going to do well, there's two main reasons. I'm going to tell you them now. One, the US dollar. Super powerful. You're seeing it right now in 2022. Number two, innovation, innovative companies. So it's not that I don't think so, Oz. I don't think so. I believe because of the US dollar and mostly because of innovative companies and the way that America's built on innovation, it should still continue. But that would be my argument against that lost decade concept. But the 14-year bull market is insane. So valuations have to come down first. So what you might do is see like a spike where we are right now, let's say, and just slower gains to get back to the peaks. But that doesn't mean a whole decade lost, and that's because of innovation. Where else are you going to put your money? There's trillions of dollars out there. I always ask this question. I'm going to ask the chat right now. Chat, tomorrow, everything's down 20%. What are you going to buy? Everything. It's all down 20%. What market do you want the most? And the chat will answer your answer, Oz. So 20% discount tomorrow, guys. What are you going to buy? Think about it. You want to, I'm not just talking trade. I'm talking investment. I'm talking, you have to hold this sucker. Okay, while the chat answers that, we'll just go through some other basics. Thank you also to the almost 1,200 people joining us. I really appreciate everybody that pops into these streams every Monday that we do them. So it's always great to have you here. The VIX also bouncing here a little bit. I saw a few of you guys being a little bit sneaky. You're like, oh, I'm in VIX long. Be careful with the VIX. I saw a few VIX things. And you could see when you put this on a weekly why I hate VIX trading. It's mostly because of the degradation. But look, if you're fast and nimble and very fast, then these particular styles of investments can work out. But remember, whenever you see a chart like this, what it's telling you is there is a huge cost of holding. And when the roll happens, prepared to be burnt. So the answer to this question seems to be mostly American stocks, S&P 500, semis, water. It doesn't matter. Some kind of stock. A few people saying gold. Surprised, actually, that it would be gold. I mean, for me, it would be American stocks. That I would just be like, American stocks, guys. 20% off extra. Thank you very much. I'll take that. Thank you. That's the one I would go. But hey, what do I know? So let's continue through everything else that we want to discuss. So obviously we've got copper declining, we've got oil declining. The main thing about oil is obviously demand destruction. We've got natural gas coming down a little bit, but well thought out concepts. People buying a few weeks ago, buying that support. Well, they got some nice bonus buys. I mean, what did gas end up going up? Went up about 51%. They call this the widow maker, not suggested to most people. Very dangerous style trade. Very dangerous indeed. Let's go to the terminal rate here quickly, just so we can see it. Terminal rate sitting at around 4.92, 4.93. So still pretty consistent. Just looks like this for most of next year, then one drop. So effectively still very similar to the actual pre-CPI number. Now, when we speak about CPI, for some traders out there, it's been hard. CPI was such a big announcement that it changed fundamentally the market. It changed the positioning of the market. And when that happens, remember your technical analysis will become weakened for usually a 1 to 2 week process. Now, it's very rare that you get these types of huge bits of news that completely change the landscape of the market for that initial period. But for 1 to 2 weeks, TA can become harder because it becomes a fundamental driven market. Then it goes back to being TA again. So just remember that if you ever, the trials and tribulations of traders is always really similar. You might have a system, might be the best system in the world. You could still lose, and you will still have patches that are tougher than others. Do you have the mental fortitude to get through those periods? That's what the temperament that changes you from good to great to amazing, at least in my opinion. And that's most people I've ever met. That's the way it has to be. Samuel Champlain says that's why you don't use TA, you use Kramer. Yeah, but Samuel, your indicator's broken. Kramer goes both ways before lunch. Have you not seen his comments? 1 minute he's like, sell everything in the market. And he's like, buy everything in the market an hour and a half later. You can't use Kramer anymore. He's got you. He's playing double Kramers on you. Double Kramers. By the way, I do have just a quick announcement. If anyone's interested, just remember that the Cyber Monday sale, links in the chat, ends today. Yeah. So if anyone's interested, that's pretty much almost over. So a few people asked me, and we end up running an extra Monday sale because people were literally pretty excited to do it. Another big thing about that is we're moving to the greatest currency in the world. So obviously USD on the website. So that'll just be easier for everyone around the world and technically just better to go with. Okay, let's continue to go through what else is happening here. We'll go through some other pairs. Let's have a look at the big one, Apple. So here we have huge stock, obviously weakened here this morning. Now, this is a big open change. Look at this. So this is going to hit that alert that we were talking about. It's made a series of lower highs, and it was weak on the Friday session. It's now going to weaken again here today. Another tech stock coming down while the market's floating at these highs. Now, as we know, if Apple ends up finding weakness, where could it go? Maybe to fill some gaps down at 136. So I think this is a big open here today. If it gets underneath this low, rallies should be met by sell demand. And again, that will be consistent with what we're seeing in the stock market as well. So very, very interesting. Richard, yearly membership technically doesn't stack unless you're like within the last month. Yeah. Sean says, Tom, talk about the effect of potential unrest in China. Yeah, we're getting there. We're getting there. So obviously that's one of the effects here for the Apple stock. So of course, unrest in China, manufacturing, another supply chain issue as well. So demand's definitely coming down. I don't think that's a question. You can see it in collectible markets. You can see it in everything. So demand is lessening. Let's ask the chat here. Did you spend more or less on Black Friday this year? Chat, we need your powers. Tell us, this is a poll, effectively, more or less. In fact, I might even make it a poll. Here we go. We'll go over to YouTube. Let's see what you guys spent. Effectively, more or less. And where's the poll? Here we go. All right, let's ask the community. Only the poll will sort it out. But yeah, I think demand is weakening. Now, we have China, of course, with lockdowns. And I've always said this is a consistent thing that we've seen this year. So they're locking down. People are obviously cracking it over there, which is totally fair enough, I guess. So that's what's happening. We're getting China lockdowns. That hurts supply, basically our supply side again, which gives us shock issues. That's affecting the chips, which of course go into things like iPhones and everything else they make. So that's of course hurting the US stock market here today. This, I still think they will eventually lift it, but not for now. I mean, clearly they're not going to do it because they don't have the solution. And the solution has to be for them, probably their own vaccine they make in their own country. And just they're not going to do it just yet. They don't have it. So I think that's probably what you're looking for in this issue. Now, is it a problem? It stacks on top of the issues that we already have in this world. So yes, I don't think it's good, but I think it's less bad than it was because now we truly do have demand destruction. So yeah, I mean, my opinion is it's going to hurt all chips. It's going to hurt all manufacturing, and it will definitely not do anything good for inflation. So I don't think it's a positive at all. It's mostly a negative. That means we're nearing a Fed pivot. A lot of people make a huge deal about the Fed pivot. I mean, remember, the rules are with the Fed pivot that it actually never helped. When the Fed pivoted and cut rates, why are they cutting rates? The market might see that as a positive initially. They're cutting rates because the market is sick. You can tell that by the US 10Y. See, this all goes back to the US 10Y. The market is sick. Otherwise, the US 10-year wouldn't be so horrifically inverted versus the US 2-year. And that's telling us straight away the market is disgustingly sick, and the Fed actually do need to pivot because the longer we sit here, the more valuations will have to compress due to sickness. Demand destruction is here. You can see oil. You can see copper. I mean, it just wouldn't be doing this otherwise. So does that mean we have to panic and run around the street? No, I'm not doomsday prepping here. I'm just saying that it's important for us to understand that, yes, the market is sick, and you don't want to go euphoric and, feel like everything, you're the king of the world and you're going to buy everything and everything's hunky dory, because it's probably not. Zaki says, but that's the time to go long the market after the Fed starts reducing the rates. Well, historically, actually, that's incorrect again. It's when they've reduced the rates, we've actually crashed further. Then we've reborn like a phoenix coming back up. So there are a lot of stats with that. You can go pull them. I think I had them on the video the other day. These are not the ones that I had, but yeah, that's it. Do remember as well that that the current most performing markets seem to be in inflation, stagflation style stocks. So gold, that's a stagflation winner. Actually, metals are a stagflation winner. Energy is a stagflation winner, theoretically. All those commodities tend to hold up in stagflation. And that seems to be what they've rotated mostly into the last month. That was the one that they've picked up into. Anyway, Apple weakening. Let's have a look at Amazon. Let's look at these big stocks that we all care about in these markets. So Amazon, not too bad. I mean, obviously just floating around in these lows. Let's have a look at Google. Ad spend back at a kind of critical zone. Nice pull up, definitely nice. Pretty decent. Let's have a look at semis. Now, semiconductors are going to be coming back down today, 1% down. Again, starting to kind of top off here a little bit. I'll show you another one just so you can see a commodity here. This is a iron ore commodity. You can see the island formation here. What if we get a gap down? Does that begin again a drop in the commodities? One of the things that's holding these markets up right now. Interesting. So we want to be aware of that. Distribution potentially in energy sector. We want to be aware of that. And let's have a quick look at Bitcoin as well. So you can see here, Bitcoin coming back up to this location, this previous supply zone that dropped the market. It came back up, bang, bang. Now a new low. Rally should be met at this stage by shorts. So this will be a big one here. Tom, you really want to check German bond yields? Yeah, I should do that again. That's correct, Martin. Yeah, German bond yields can be quite good as well to look at here. Finken79 says pivot, blow off top, and then crash like a 30s. That would be scary, wouldn't it? And Matthew says, do you still think crypto will bottom around the same time as the market? You say the low will come by 4 Feb. Well, theoretically in studies, yes. But what will the overall market hit at an all-time low in June and July? If the overall market hits the all-time low in June and July. Well, it depends how crypto is going down there. So okay, here's a classic case. So if you get like a stock like Shop, yeah? And you look at this stock, how long has this been down here for? So this has actually been sitting at a similar price since May of 2022. Why? Because it absolutely got demolished. I mean, the market knows when the market sniffs out it's sick, it destroys consumer discretionary. Goodbye, bad evaluations. Goodbye, just crushed these stocks. Now, if you look at this stock, you can't really hate on its chart. I mean, you would have to argue that it's in. I mean, look at the volume. Is that unusual volume? Wyckoff's third law? Absolutely. So what it's telling us is that even if crypto does, let's say crypto gets annihilated. Let's say Bitcoin goes to 9,500. Okay. Just theoretical. Could that be low enough that the stock market could go even lower and crypto will actually still hold? Well, it's very figuratively possible because crypto at that point would be down 83. Well, actually be down 86% at that point. So that'll push us down 86%. That's 86% off. It's starting to get very depressed. Still, the stock market would only be down, I don't know, let's say 22% at that point or 24% at that time. It's a totally different scenario, yeah? So, yes, it is possible that crypto could base while the market's getting destroyed. Still, absolutely. It's possible. Oz says, lol, 9.5. Okay, what about sub 3K? Sub 3K will need a very big problem in the stock market. Sub 3K, yeah, big issue there. So we're about 22 minutes away from the market open. We need to go through some more stocks. Let's do that. Let's do Tesla here to begin with. So Tesla, well, it's down here today. I mean, this will probably be getting hurt by China news as well. It's not a good thing for them. Obviously, the Shanghai factory. Now, if you're feeling frisky, if you're a frisky Tesla buyer, do you feel frisky enough about it coming back into these levels and then potentially bouncing back off it? Well, I think that's fair. I mean, it's fair to think about that 173 zone as an intraday buy. I still probably stick with the plan of these markets are looking a little sick and that what this rally could be is ultimately down here. And I guess I feel fairly comfortable about that. Now, I don't really have any horses in the race on Tesla. For me, I have a Tesla car. That doesn't mean I love the valuation on the Tesla stock, and I don't think it's obscene like it used to be, but it's probably, what would you call it? Like not even neutral. Somewhere. It's somewhere in these things. Some people would say this is really cheap. I would say this is still not necessarily as cheap as it could get. So down here, I'd say, okay, cool. We're entering the better zone, and maybe some insane price you wouldn't even like to know about. It's where I think true value is at the moment. But anyway, this area here is very interesting. So this stock zone is 173. If 173 is hit, you would think that maybe some buyers would come back in somewhere between 173, 171. Then they may commit. Now, if they commit and they get to 200, nice. They push past 200, really nice, because that then can move to 230-ish. So I don't discount bull case scenarios here. They're definitely there. But if we get a new low, we've got to watch out down below, because that's when you're talking about those 136s, filling the gap that's here, 123s. And that's where I think a lot of longer term investors will say, you know what, maybe I want to hold this. Now, a lot of you would disagree with me and say it's already cheap. Of course, we always fight about this one. I don't really mind. That's the beautiful thing about all these markets. We all have different opinions, and you might hate Microsoft. I might think Microsoft is, actually, I think it's expensive, but it's my favorite stock in the market. So it's not cheap, but it's not obscenely expensive like it used to be. That's the way I'd look at it. So for me, it's okay. It's not too bad, yeah. And that's how I feel about this stock as well. It's okay. How's my Tesla going? It's going pretty good. It's going pretty good. Nothing really wrong with it. It drives. It does good stuff. I would say that sometimes it doesn't open when you take the phone near it, which is a little bit annoying. But then eventually it does open. But other than that, yeah, it's pretty good. Tesla is not cheap, says Kevin N. There you go. SPY riding significant support trend line right now. Oh, yeah. So you're going to put the 2 hour on. My goodness, I've got some serious lines here, don't I? Let's have a look through where I'll use a different code. Yeah, let's use this. These are all old. We're going to go naked. I don't like any of these things. Get out of here. All these things are going to be gone. There we are. So we'll go back to normal. So I'm not sure which trend line you're talking about, but I guess you're saying this one here. So significant small trend line. Yeah, I think that's fair. I mean, my expectation is that the market will rally and then fill that gap and then possibly find sellers, move down to this area. We'll find out really whether the buyers want to recommit, push to this level. If they do, that's pretty good. If they don't, and they push to a new low, then this is where we might rally one last time and start dumping fairly hard. So yeah, I wouldn't discount the dump into at least this 37.50, and that's where we'll find, potentially the real buyers if we're going to. Tesla's trading at 24 forward PE. That's correct. If they keep on trucking, 24 forward PE is it's okay. Again, in growth, it's if you miss though, John. If you miss, that's when it gets bad. What's your thoughts on Trip? I assume you mean TripAdvisor. Looked at TripAdvisor in a while. I assume it's still cheap here ish, still low. Look, I think there's better stocks in the market than this one for the money. I haven't used TripAdvisor for a very, very long time. Speaking of using polls and stuff, 85% of you voted less spending this Black Friday compared to usual. So there you go, demand destruction in its full force. Yeah, Trip's probably not one of my favorites, but yes, it's in the previous bought area. It's obviously where it went to. And you can see a little bit of buyings come in recently on this stock. So if that's your jam, then it could be worse. Raheem says WWE at new 52-week high. I feel like there's a bit too much hype on that stock, eh? SPY's right around 200 DMA. That's correct. So that's that daily 200. Thoughts on DXY rebound from 200? Yeah, I'm a little salty on the DXY. The old US dollar, what's it doing over here? Being sneaky and coming back down into the low zone. Yeah, look, this actually could be a huge shift change. I'll feel really positive should DXY be able to actually make it through here now. That would be huge. But at this stage, look, it's come back down. This area and here, or actually around here, is where I'd like to see the change. We saw it come and tap into the supply. It's fallen off. It's obviously made a new low. It's testing back in these 105.25s, which we know is an incredible demand zone. And it's finding a rally here. So if this does, you got to think about it like psychology wise. Yeah. If a market takes a low and let's say you're not involved, what did it just do? It took people's stop losses here. Yeah. So stop losses would be taken out. Then it rallies and it breaks a new high. What is that telling you about this market? It just trapped probably millions and millions and millions and millions of dollars into shorts that are placed here and into stop losses that got liquidated. And when a stop loss got liquidated, who takes the other side? Wall Street gets in. They composite man. They're like, yeah, I got that position. Thank you very much, Mr. Liquidity, being you or whoever else is in those trades. So you got owned, other people are getting owned. Then it reverses. And when that happens, that's when you get those really strong trend starts. And we kind of saw one a little bit recently with gold, where gold came down, and you can see it down here. See how it swings this low and takes the stops. And once that occurred and we got that rejection, this one was 3. I mean, how scary is that if you were in that trade long? So the big guys, they know what they're doing. Most retail traders couldn't hold through it. They'd have apoplexy. You'd have a psychology, award in not going crazy during that period of time. And then you get that huge movement above this clearly big supply zone, and then boom goes the dynamite. So that's when you get that huge move. Now, I'm still bullish on gold, but I think I would like to see gold into these zones again to give me chances to buy extra position. But at this point, that's what you're looking at here with the DXY. So why I'm salty? Because I would prefer just because I said it, that the DXY was going to find some buyers in here. It didn't do so. So, look, that's fine. I don't mind. I mean, that's trading. Just because you think something's going to happen, you still need to see the confirmation. If it doesn't happen, it doesn't happen. But I would love to see it do this now. Yes, of course. That would be kind of cool. No weakness yet here on the DXY this morning. Even though I know it's down, that's a fairly strong move. And if it does continue to power a few more green candles, especially if it gets past here, which I'll set an alert for now. Let's do that. Let's get that alert through. Then I'll be pretty comfortable with this whole thing moving to the up. Curious why you want such a strong dollar, not good for markets. I don't. I just felt like it here, man. I don't really care. I mean, yes, I would prefer, again, the stock markets actually hold down for a little bit more. And a lot of you would disagree with me on this as well. I think it has to happen. And that is, if you see the stock market go ballistic, let's just be realistic. If we're getting a 4,300 by the start of next year, we probably didn't reset the system properly. Some horrific thing will happen to us in the future. I would like to see the market trade between this 4,100 zone and like 3,200 zone over the next year. And I know you're not going to like hearing that, but that's where I would prefer it sits. And the main reason, just so we can reset the economies a little bit behind the scenes and then start a nice growth curve for quite a few years coming out of it. That would make me very, very happy. Now, I don't really want it under 3,200 because that would mean we could be in an almighty crash. And I don't want it too much higher than 41 or 42, just because at that point, then you're starting to say, okay, we're recovered. Everything's all good. Growth's back on board. I don't know if I can see that just yet. So, getting a 43, a 44, a 45 again, those handles, they're just dangerous for us. I know, look, people won't want to hear that, but I prefer that our family members are all in jobs, and I prefer that people aren't probably suffering out in the street. That's my preference. So I would like the Fed to actually handle this. And the Fed, if I was sitting on the Fed, let's just say, or any of you, my biggest argument would be I don't want the stock market too high, guys. I need it to be in this zone. And that was the argument most of the big houses put out earlier this year to all of their big clients. They all said the same thing. This has to be where the Fed, dances around and tries to keep the market in a pocket. And if they can do that, job done. Now, that means it's great for traders because you get kangaroo market, which gives opportunity. And again, you could totally disagree with me. I don't mind. I'm always interested to anyone's opinions. All good. So we're coming in red here. We're about 11 minutes off the open. Of course, Bitcoin's been weak today. The stock market's coming in weak. I still hope there's a bit of a rally here. For bulls, you're looking at these levels down in these zones, 39.50, 39.40. You're looking also potentially for an early rally that could maybe fill the gap to that 40.25, 40.30 zone. And then potentially that might turn around for the bears, get us back down to here or even into this area. And if we rally off those, you've got to start to consider, oh, wait a second, could we be going to 4,100 at that point? Now, if we do this and just dump, then rallies will be met, I believe, by sell demand, and we could be moving towards 37.50. So let's have a look at the economic calendar as we head into this market open. And it is a week of pretty interesting stuff. So here we go, Monday opening. Our good friend Bullard he's been just having a little chat here, 12 p.m. Then we go down, CB consumer confidence. Obviously, the US is what I'm focusing on here. Then we keep scrolling down. We've got the ADP non-farm employment change number. Don't worry about this one too much. It'll move like 1 minute, 30-second, 5-minute charts, not much. Then we've got prelim GDP, whatever. Then we got the JOLTS job openings. And then the Fed chair, Papa Powell, he's coming out 1:30 p.m. on Wednesday, New York time. So make sure you have that one because you need to know about that. Then we get some CPI for some other countries, which will be interesting. Then we have the big one, core PCE price index. We see this here, 8:30 a.m. on Thursday, December the 1st. So a lot of news. ISM manufacturing PMI. And then we scroll down to the big jobs number. So all of this will be pretty important. I would expect to see the jobs numbers, I would think they're going to weaken now. Remember, it's all about seasonality. So usually the US is putting on huge numbers during this period of time. So if you go back to other Novembers, which is a bit hard for me to do here, usually you get a lot of casual hires that come through for Christmas. I think that's going to be a little bit weaker this year. We'll find out. And yeah, that jobs number is probably not going to be the best. How's the market interpret it? Hey, your guess is as good as mine. I don't try to think about that. Instead, I try to think about what is the market setting up for? Where's the trap? Let's see if we can find the trap and react to that. That's what this is all about, really. Mobius Fund says, sorry, but the PE ratios are still too high on too many of the top stocks, even after lackluster earnings. Yeah, well, that's right. They haven't been contracted to what you would expect for probably weakened earnings for multiple months and years. And that's why you're not at those average means. Like, let me see if I can pull it. PE ratio is a little bit dodgy to use. Obviously, there are better than PE ratio. I'm just going to use multiple.com just to illustrate what we're talking about here. So this is Schiller PE. This is normal PE. So normal PE is sitting at 20.94. Now, still over history, these are our standards. So if you get into these as an investor, you're like, whoa, I like that. I like that a lot. And that's when you start to get a little bit more excited about the market. I like to look at forward PE as another option. So it's not here, but forward PE is very good. And then getting that down to below averages by one standard deviation. That's very, very solid as a way of picking things. And Schiller PE is also quite good, but Schiller PE hasn't worked for over a decade. So ever since I've been in trading, I've never personally used Schiller PE except for the GFC. And then since that point, it's just terrified me to be in markets based on Schiller PE. So they're still sitting at 29.5. So pretty wild numbers there. The old Schiller PE. Yeah, no worries, Mobius. That's all good. All good. PE is a bad indicator over history. That's correct, Kevin. It generally is. That's why Warren Buffett was so smart, where he took, well, which doesn't work anymore, where he took the American, effectively entire GDP, and he said, okay, let's take the stocks with this and worked out a ratio or whatever it was. It makes perfect sense because you didn't have globalization at that point. Now you have American companies earning significant money from overseas. So the Buffett indicator probably would have to be like a worldwide GDP allotment or something. Riding S triple Q to the bottom, boys, says Trapper Buck. Good luck, Trapper Buck. Hopefully, S triple Q. You guys love your 3x leverage funds. Oh, actually, S triple Q isn't the 3 leveraged, yeah? That's just single leveraged. Not sure how it is. No one is saying anything about materials, about the diesel disaster we are having, which will affect the trucking, delivery, etc. From Gamer. Yeah, look. I think we could list about 35 to 40 different problems with obviously a lot of things here, Gamer, for sure. The world is deglobalizing as we speak. Agreed with you, Marcin. We won't never say never, but I don't think over the next 5 to 10 years we will see globalization at the same rate as it was during maybe the peak years of whenever it was, 2015 to maybe 2019. So yeah, super important to think about that. Skeptical Investor says, hi, Tom, big fan. Cool. Once we join the community, are you able to see your own portfolio or do you review it? I look in group mentoring. I talk about it, but no, I basically just share my watch list. Skeptical. If you want to see my investment portfolio, it would literally just be like a bunch of ideas, just sectors and concepts like that. Look, investments are different to trading. Trading is where you're making decisions based on shorter time frames, anywhere from days into months into weeks, and into weeks into months. Whereas investments are usually multiple years. And I don't tend to be like a person that goes and picks stocks like a lot of other people. I'm not good at that. Yeah. I'm a specialist at being able to see rotation. And once you see rotation, once you think about long short strategies, you think about those concepts and you put options and different instruments onto it, that's what I'm good at. Like if you said to me, hey, Tom, you go, here's 50 crappy stocks, you go find the best stock and read the balance sheets. I wouldn't say I'm good at that in comparison to maybe some of you out there. I'm okay. I know how I do it quickly, but that doesn't mean I would be the best stock picker in the world from that aspect, if that makes sense. Trade what you're good at. I'm good at most markets, but I'm good at the big ones. Again, you go put me on a weird SPAC stock, I'm going to be like, yeah, I just don't want to do it. Just don't put me on the SPAC stock, okay? No SPAC stock. Carl says market ignores balance sheets. Well, it has for quite a while, yeah. Finkin79 says, "Don't lie, we know it's all Microsoft." That would be fair. It's probably a little bit of that. So here we go. We're about 3 minutes away from the market. So again, let's just go through these concepts. So at this stage, we made a new low. We took out 4,000 pre-market. This was a previous weekly and daily level, so fairly significant. Let's take a look at the weekly close just so we understand where it was. So this is where we come in. Was a weekly close, fairly bullish, but again, long leg doji held it back. This is the futures market, so we just know that. Here's where the market currently sits. So we didn't quite get a higher high, or if we did, it was just very, very small higher high. So basically, it's similar highs. Some people will think this is a doubling top situation. It's random that would be so because we have a wick on this side and bodies on this side. Usually, you'd want to see the wick on the right to show the weakness. So the initial weakness is here. I think we probably should rally for a period. Then potentially we dump. If we just go with straight dump, again, 39.40, 39.50 would be that targeting area. And then if we push underneath 3,900, which I don't expect just yet, but if we do, that's when we start talking totally differently. My guess is something like this would be that if I wanted to extract maximum value, that's probably what I'd be doing if I was the Wall Street cronies right now. But I don't see the book as much as they do. Richard Parker says Tom's the kid from Sixth Sense. I see rotations. That's true. All right, so we're literally 30 seconds away from the open. Let's just talk about a couple of stocks. We've got Tesla coming in here, opening up down 1.66. The news here, of course, is China and lockdowns again hurting these ones. 173 to that gap fill, 170 could be an interesting zone here this week for Tesla buyers. Obviously, if you're a bear, you just want to see a new low so you can get down to those 140s, 130 areas. Apple definitely coming in weak. 145 new low should test this alert. Rallies you would think are going to be met by bear demand, and there we go. So there's the alert going off. 145 minus hit, and the other stocks that are going to be hit are semis. So semiconductors across the board, SMH, etc., all being hit up. Now we do have a couple of islands. Let's have a look at how they're seeing. Again, the semis. I've been talking about that on the main channel. Here is SAP, which we haven't seen break down, so that's not going to be one yet. We've got BHP. We've got a few others. We also had one breakout here just from the private community last week, which was Dick's Sporting Goods. Theoretically, it was doing pretty well. So that's a massive inverse head and shoulders. Check that out. During normal bull times, I'd look at this and I'd be like, hell yeah, Dick's Sporting Goods, let's go. But I'm not sure if that's the way we look. Very, very nice reversal though down here. A few people got that one. They were pretty happy with it, I'm sure. So yeah, most of these stocks are mostly down. Amazon doing okay around the Black Friday sales. Apple and anything to do with China though was the really big hit. And you'll notice today is not the day of tech necessarily being super weak. So already a nice rally here. Look at that instant, like little bit of rally. Let's go 2 hour. You can see there's that initial rally, and this is in line with that plan. Let's see if that plays out today. That's probably my favorite concept of today. It's not, I would rate it like a 6.5 concept out of 10. It's not super strong. Sometimes you see things, you get like 9s and 9.5s if you know what you're doing. But yeah, that's the way I would look. Not financial advice person says, now that everyone bought puts again, SPY has room to rally to 427 into December 2022. Thank you, Bears, for your charity. UVXY and UVIX will never rally again in 2022. This is what this person says. Short UVIX, not financial advice. I like it how they just said short UVIX at the end. Yeah, well, anyway, that's not what I'm saying. That's just a comment that's here. So people saying, wow, shop. Let's have a look at shop. 8.18. Yeah, look, it makes perfect sense that this would have a day like this on it. It's a beautiful consolidatory accumulation pattern. And now I don't think this stock is expensive in comparison. I mean, look how low it is. Look where it is. It's a good stock. It benefited from the pandemic. Now, there are problems with it that have got nothing to do with sales, but still, it's definitely holding a good level. Cyber Monday rockets. Yeah. NVIDIA. NVIDIA is rallying right now. So again, expect the rallies from a few stocks. NVIDIA is doing well because of, I think, a bit of the Facebook stuff, and just it's the best semiconductor stock. So when semis do okay, it's okay. Still SMH though overall looking medium to low, I would say. Harry Lou says, I noticed you're not using volume information when interpreting chart patterns, head and shoulders. Any reason why? Oh, no, you certainly should, Harry. It just wasn't on the chart. So you can use both volumes if you wish to. Yeah, you can certainly do that, man. No, there's no reason why not. I just wasn't taking it that seriously. Like, if you want to get really down on a chart, take me a little bit longer to go through the analysis. But yeah, that's okay. So this morning, as we said, hoping for a rally here early, maybe a dump after it gets up to that nice level. The teller was really that we took the low pre-market, so that's not usually fairly normal. And the real market wants to say, well, wait a second, we didn't get that price. So they're coming back up to potentially the gap. And that's the favor at this stage. So dump into rally. It's Monday. It's the kind of way it works. And then maybe a dump later on. The surprise of the day was probably the big movement on the DXY just randomly before. So we saw this big dump in DXY that came through, and now we're recovering that. So again, very interesting daily close here. Look at these wicks. So if we get this imagine if this by the end of the day is up in here, and it's like this huge wick. Again, that's wick, 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 wick. Does that remind you of something, anyone? I'm going to leave the chat like this while I mention this thing. Does this remind you or started reminding you of other trade that you may have seen recently? Anyone knows? Chuck it in the chat. Now, just another reminder. Hey, it is the long weekend of sales. So, of course, we do have our sale, Cyber Monday. It is over as of Monday close. Yeah. So make sure if you're interested in anything that we do have, if you're interested in finding out some of the ways we approach markets, you know, I love the Advanced Scalping Masterclass or any of those other ones, then definitely check it out over at fxevolution.com. You can just click on the link. And yeah, if you want to support the channel and you're interested in learning a bit more as well, that does help out. And do also remember, guys, that we will be moving the website into USD in the future. So technically prices will be going, I guess you would say, sideways to up because of that. So yeah, we have to go to the greatest currency in the world. What can we do? Oz says, Tom, can you please have a look at Euro US dollar to finish up? Sure, man. Let's see what other people said. They're saying gold. Yep. And Tesla. Well, Tesla, if it had enough bounce wicks, but yeah, mostly it's starting to look like gold. And if you get the right types of turns, it's a consistency. And that's what you want. You want that replication consistency in your trading as much as possible. All right, we'll finish up here with a random one, which is the Euro US dollar. Let's have a look at that. So Euro USD, it's still tapping what I would consider a very important area for Euro. The main reason it's important is because it went to break structure, and then it left behind this supply here and this supply. But I think this one's fairly critical. We saw it react off at once. I must admit, I didn't expect it to take this high. It did. Now that's interesting because this high takes out all of that. So if we go down to a 2 hour, you'll notice it takes this one. So yeah, look, I want to see the daily close quite a lot on this euro. Yeah, because it's taken all of these highs here. This was a very, very well set up dump, and then it just goes bam and smashes them. The biggest problem with the euro US dollar is just has to be this statistic I'm about to read out right now. I'm going to refresh it. I'm going to get the update here. 73% of retail traders are short the euro. It's not really what I want. I would, if you're going to be shorting the euro right now and long in the DXY, you really want to see that more close to a 50-50 or a 60-40. And ideally it's in your favor most of the time. But yeah, to be trying to short this right now, it is tough because of that. Too many retail traders floating all over it. Can you have a look at Shop? Yeah, definitely checked out Shop. The greatest currency for how long? Longer than other people's currencies will be my answer there, Graham. It's very tough to topple the dollar. It's very tough to topple the dollar. The USD is just, it's a beast. And it is a beast because of the strength of the economy behind it, yeah, in comparison to others. So unfortunately, for other people like me, I'm pretty sure my poor measly Australian dollars won't hold up against the USD eventually in the future. We might be the lucky country, but I'm not sure that's it. Also, hopefully a few of you have been watching the World Cup. It's been not too bad, so I hope you're enjoying that one. I've been watching all the great countries kick Australia's ass. We did win one though, so that was good. And we'll find out whether who wins. Let's ask the chat here. Who's going to win the World Cup, chat? Give it to me for the end. I know we're a finance stream, but I want to know. It only happens once every, blue moon, yeah? Mohammed El Masari says, Tom, where do you get your retail trading position data from? A few different places, Mohammed. You can ask me that in the private community. I'll give it to you. Okay, here we go. People are voting in. I'm pretty sure that it will be a big mix of just people going for their own country. I'm going to say Australia's going to win. What do you think, guys? Am I right? So Whiskey Law says not the USA. I bet you he's probably from the USA too, but he doesn't believe. Oh, Gary's going Brazil or USA. Very good. Spain, Denmark, France, Netherlands, France, Zimbabwe. I don't think they're in it, but yes, fair enough. The Houston Astros, Germany. I don't think Germany could win, Dave. I'm sorry. I saw them play. I don't know what was happening. Brazil. A few people say Brazil, not Canada. That's probably true. Unfortunately, I watched them play as well. It was a bit sad, yeah. And then Serbia just gave up their lead. I was watching that before. All right. Well, thank you so much, guys, for voting in that. Thank you for voting, of course, today. Good luck this week. Hopefully you get whatever you need in the markets. And for now, we, I guess, favor the slight rally into dump later on in the session. We'll find out whether that does happen. Thanks so much. Thanks for subscribing. Thanks for giving me a big thumbs up. The support throughout the years that we've been doing this, always appreciated. And that's why I'm sitting here at 1:40 in the morning, AM, checking out the best market in the world. Thanks very much. Bye for now.